Hey Money Guy family, it's your host Brian Preston here with Mr. Bo Hansen, back with another episode of Ask the Money Guy.
That's right. You guys have financial questions. We have financial answers. Go out to your favorite social, use the hashtag AskTheMoneyGuy, go to the website moneyguy.com, ask us a question there, and we'll answer your question right here in the Tesla.
It's Brian Preston, the Money Guy.
So today's question comes from a close friend of the Money Guy show. This is from Tony. And he
Little
says,
T squared.
A little T squared, I guess is his nickname. Awesome. So this is not necessarily related to gaining wealth, but I have a question for the show. In the digital world we live in, what are the recommendations on keeping paper record copies for financial transactions? Are file cabinets really a thing of the past? It's a great question.
First of all, T squared. You know when you're onto something good?
When's that?
Is instead of your friends picking on you about something, they actually kind of jump
use
in.
it.
They actually use it. So I mean, that makes me. You have no idea to know some of my closest friends actually listen to the show and are I guess to say fans, even though they're like friends and they know me personally. But it's still pretty cool. So T, here's the thing: is that, and I think I got the scope of what you're really asking. You're saying, hey, look, there's all these articles on how long you should keep documents, but we're in a digital world now.
Right.
I mean, I go on my bank website and they say they keep like 7 to 10 years worth of bank statements. My credit card companies are keeping stuff. How long should I keep it? I want to give you guys some tidbits, and maybe this is because I come from a CPA background and prepared tax returns for close to 2 decades, is that the big boogeyman that you're worried about hiding under your bed with your documents is the IRS. We're all worried about, are you going to get audited, and how do we keep ourselves safe with all of our permanent records and things like that. So I'm going to tell you to embrace this new advancement with digital things, with your banks keeping up with records, your credit cards, but when it comes to documents like the IRS, like your annual tax returns, I always print out any supporting documents for anything that I'm taking as a deduction and keep that separately, scan it, upload it to my cloud-based storage so that if I ever get asked, I'm on stable ground.
Sure.
The other problem with digital documents being stored by your providers, your banks and your credit card companies, is that you lose some flexibility if you ever want to vote with your feet. If you ever want to change and go to a different carrier, you're going to be surprised at how fast they dump your data. And they do that on purpose because I think that's one of their client retention strategies, is to give you this robust level of storage so that you never leave. I mean, and it's brilliant in that aspect, but just be aware of that.
So I think the answer to your question, if we're just going to get to the base of the question, is yes, big filing cabinets are a thing of the past, but you probably still need a small filing cabinet for those documents we're going to talk about in a second that it does make sense to keep in hard form.
And I think you also need to be aware that you need to go find a partner, whether it's Dropbox, Google Drive, or Box, and make sure you understand what the different storage components, what the security are. That's not we're financial guys, we're not going to tell you that, but I think you find a good partner and then go invest in a good scanner. We've always had great success with Fujitsu.
That's right.
If I said that correctly, we have probably 6 of those in our office, and we've different versions because they keep upgrading them. But have a good scanner, and that will make your life a lot easier.
So let's talk a little bit about time frame, Brian. Let's talk about the things you should keep for less than a year, for more than a year, and then there's a magic number past a year that we have to think about too.
Yeah, so less than a year, this is when you get your ATM statements, your credit card receipts, all those bank deposits.
Sure.
Keep those things until you get your next bank statement or credit card statement that you can check off these things. And unless, and here's the earmarking, you'll notice once again I make a carve out for the boogeyman of the IRS. If you need it for support documentation on your taxes, keep that separately. I know it's boring that you have to have this shoebox full of data, but it's just important that you do keep the government happy with your tax filings. But you can throw that stuff away once you get those monthly statements. And then a lot of you are saying, well, wait a minute, I get monthly statements from my annual providers on my investments. What about those? Those type of things, what I recommend is keep your monthly statements until you get either your quarterly or annual statements, and then you can throw away the months that are represented now in those consolidated statements.
And I think you said the same thing is true for insurance policies. If you have an insurance policy in place, you want to make sure you keep like the declaration page or the annual notice until you get a new policy, you get the new renewal statement the next year.
Yeah, same thing, life insurance and so forth. So that's great advice. And so let's talk about documents that you keep 1 year or more.
Okay.
This is any type of loan that you might have. If you have a car loan that's 3 years, 4 years, 5 years, you need to keep that loan documentation until that car is paid off. Now, when the title shows up, keep that bad boy. Once your car's paid off, start looking for the title. But it's one of those things where anything that you know is going to be an obligation, you need to have records
That's right.
for. Also, that's where I would keep those annual statements for at least for 1 to 7 years. Just once again falls back to that tax statements and supporting documents and things like that.
Another thing you want to make sure you keep for over a year is some of your investment purchase confirmations.
Exactly.
Because you want to make sure that at some point in the future, most of us tend to hold our investments for longer than a year. When it comes time to sell those investments, you want to make sure that your cost basis is updated. So you need to have a record of when you bought that investment, whether it's a liquid investment or a rental house or whatever the case may be. You want to know what you paid for it, so when you sell it, you know what your tax basis in that is.
Now, when we're talking about liquid investments, whether it's stocks, mutual funds, or bonds, the good news is this has gotten a little easier since 2008. The government actually passed some new legislation on this. It's starting in 2011, stocks. 2012 it was mutual funds, and then 2013 it was bonds, is that your custodians will start tracking basis for you. So if you do have a custodian that's tracking basis, it's okay that you're not keeping up with every little documentation. But I will tell you, if you have some of those legacy holdings that have been hanging out there pre-2011, you better have some support documentation to help you if you ever do want to get rid of those holdings, so you can just make sure you're not paying too much in taxes.
That's right. Or if you're someone who says, you know what, I have a steel trap mine. I know that I bought that thing back in 1994, but I remember how much I paid for it. While that may be the case, when your heirs or when other family members are trying to find that same information, they might not have as much luck. So make sure you keep a record, make sure you have that documented somewhere.
Let's talk about 7 years. 7 years is a key number for taxes. Now, a lot of you are like, wait a minute, 7 years? Where did that come from? Because I've always heard 3 years. It is true, the IRS has 3 years to come back and look at you for taxes, but there's two other provisions I want you to know about. If you underreport your income by 25%, they actually have 6 years to come back. And then here's the one that just scares the heck out of people, but I think it's a lot rarer, is that if they accuse you of fraud and they can prove that there's fraud, they actually have unlimited years that they can go back. They can do what's called a mushroom audit and go into different parts of your life. It's really scary stuff, but rules of thumb is typically they can do a normal look back of 3 years. If they find that you've underreported income by 25%, it's 6 years. So that's why you see a good rule of thumb is 7 years for those IRS documents. I always tell people I still keep my tax returns for years. I don't actually throw the returns away just so I have something to, but all the individual support documents, probably after 7 years, you're okay, as long as you don't have some complex transaction that you think might be a little in the gray area that the IRS is going to eventually accuse you of fraud or underreporting income.
So 7 years is kind of my really important date. So once I get past 7 years, I can throw everything away. I don't need to keep anything longer than 7 years.
Well, there is some stuff that you just need to keep forever. Think about birth certificates, death certificates. If you get discharged from the military, divorce decrees, oh gosh, there's so many different things. Social Security cards. These are all the permanent type records, life insurance documents, business ownership, and things like that, deeds, titles to your cars.
One that we see all the time, and for what we do for a living, we obviously help people as financial advisors. We're fee-only financial advisors. A lot of folks, they may have worked for a company 20, 30 years ago, and that company may have had this thing called a pension. We don't hear a lot about those anymore. Well, pensions are one of those things that it might be a benefit that you had in your 20s that you don't actually realize until you're in your 50s and 60s. So if you have documents on pensions or any sort of defined benefit type plans, you want to make sure you keep those as well, because there's a good chance that company could change hands a number of times, and you want to be able to track your benefit through time.
Great advice. And then that made me think of also, there's a lot of you guys, when you go look at these safes or look at the secure place in your house that you store stuff, you go find some old stock certificates. I always tell people this is one that will actually get clutter out of your house. If you have, because some people used to get like dividend reinvestment plans where the stock certificates would just show up at their house. Get those things in street name. Go put those at a custodian so that if the company's merged, if it changes names, if it does stock splits, all that stuff's automatic instead of them sending you out through paper for you to get lost and have to do affidavits and just all these stock powers. There's so many complicated things that can happen by you manually keeping stock certificates at your house. And then that's the last thing is that some of this stuff, make sure you do have a secure place at your house, whether it's a fire safe or maybe you can even do the traditional P.O. box. And then I do encourage you, if those permanent documents.
Safety deposit box.
Oh, did I say P.O. box?
P.O. box.
Safety deposit box. So safety deposit box, and keep an inventory at your house of what's in there, especially your estate documents, your wills, your life insurance, and those type of things. But then if I can encourage you, and this is kind of the meat of what Tony was asking about, go figure out a good electronic partner so you can get those stacks of papers for the monthly stuff and the ongoing things that you can just get out of your house. If you start doing that now, 7 years, 8 years, 10 years from now, it's not like you have to actually throw away those electronic documents. You can if you want to free up storage, but storage is so cheap, it'll just kind of be done for you. Whereas right now, unfortunately, in paper form, this stuff just builds up. That's and you're just like, oh my God, how do I get rid of the clutter? So go tackle this stuff. By the way, we use as a resource, if you're wondering, how did we come up with less than a year, year, 7 years, forever? Just in case, you want to know a resource, we actually use Consumer Reports. They actually had a great list on giving you data on that. So that's not only our data, that's also getting support from a publication that's kind of recognized. So thanks so much for tuning in. Hopefully you're loving this content. If you have questions, go to Ask the Money Guy, or do hashtag Ask the Money Guy, or go to our website, Money Guy.
That's right.
You can always reach out to us. We're looking to spread the good news of the abundance mindset of you can do better with your army of dollar bills. Bo, nothing to add?
I'm your co-host, Bo Hanson, along with the host, Brian Preston. We'll talk to you soon.
Stash out.